The Iraqi Dinar today latest news. The world of international finance is watching Iraq with unprecedented intensity, as what appears to be a fundamental economic transformation takes hold in 2025. This is not simply another round of minor governmental reforms or short-term adjustments. Rather, it is a comprehensive overhaul designed to catapult the nation's financial system out of decades of instability and fragmentation into a modern, digitally compliant global structure. The sheer scale and coordination of this endeavor are what demand our attention, signifying a profound pivot point in Iraq's history. For those who have been closely following the trajectory of the dinar, the current developments suggest a definitive move toward a complete system reset, an event which promises to reshape the economic landscape of the entire region and potentially redefine the currency's global standing. Historically, Iraq has contended with a complex web of financial challenges, largely characterized by pervasive inefficiencies, vulnerability to corruption, and an almost complete reliance on the US dollar for managing international trade and internal economic functions. This dependence created a volatile environment where the local economy was perpetually exposed to the unpredictable fluctuations of the American currency. As the dollar's value shifted, so did the domestic prices of goods, the real value of salaries, and the national rate of inflation, making it nearly impossible for ordinary citizens to establish financial security or for foreign investors to find the stability required for long-term planning. The unpredictability acted as a significant barrier to sustained economic development. The current situation, however, marks a dramatic departure from this historical pattern, signaled by the formal and active involvement of powerful external entities, namely the US Treasury and the global banking giant JP Morgan. This convergence of a regulatory authority and a major financial technology provider is the clearest sign yet that the strategy has fundamentally changed. We are no longer observing tentative small-scale pilot programs. This is a fully coordinated, large-scale intervention designed to modernize, stabilize, and digitize Iraq's entire financial architecture from the ground up. The best analogy is the transformation of an old, congested and accident-prone dirt road into a secure, high-speed, fully digital expressway for all forms of monetary exchange, instantly and safely flowing both domestically and across borders. The reason why a global behemoth like JP Morgan is dedicating significant resources to this effort is rooted in a straightforward analysis of opportunity and necessity. Their role extends far beyond mere consultation. They are actively constructing the critical digital infrastructure, the very backbone, that will enable the Iraqi financial system to move value instantaneously, securely, and in full compliance with stringent global standards. This advanced technology ensures that every single transaction is fully traceable, auditable, and seamlessly integrated with the world's major banking networks. Such infrastructure is indispensable, a foundational prerequisite for any currency seeking to achieve genuine global credibility and recognition in the international marketplace. For a national currency to be respected and valued globally, the issuing nation must unequivocally demonstrate that its financial operating system is transparent, immaculately clean, and technologically modern. By deploying their cutting-edge technology and expertise, JP Morgan is essentially helping Iraq construct this necessary proof of concept right now. They are providing the technological and structural assurance that transactions involving the dinar will be conducted on a platform that meets the highest international benchmarks for security and efficiency. This critical hands-on involvement is what transforms a political aspiration into a verifiable engineered reality. In parallel, the role of the US Treasury in this financial evolution cannot be overstated. It is the ultimate stamp of legitimacy and regulatory oversight. The Treasury's commitment ensures that every reform, every new system, and every protocol implemented by Iraq aligns strictly with the world's best practices in financial regulation, including rigorous anti-money laundering (AML) laws and comprehensive auditing standards. This oversight is vital for making the dinar and the entire Iraqi banking sector credible in the eyes of the international investment community. The explicit presence of the US Treasury serves to reassure the global markets that Iraq is no longer a jurisdiction prone to opaque financial practices or vulnerable to uncontrolled, illicit flows of US dollars. Their cooperative guidance is effectively placing a seal of transparency and institutional integrity on the revitalized financial system. This crucial high-level coordination is the engine driving the necessary confidence to attract substantial foreign direct investment, stabilize the nation's trade balance, and systematically prepare the dinar for its eventual reemergence and recognition on the international stage. The term financial reset in this context refers to a systematic transition away from a heavily cash-dependent economy, which has long been beholden to the US dollar, toward a modern, fully digital and dinar-centric financial ecosystem. This massive undertaking includes the introduction of sophisticated digital payment networks, the capability for real-time processing of transactions, and comprehensive integration with the international interbank settlement systems. Crucially, it also encompasses the strict implementation of robust anti-corruption mechanisms, thorough auditing procedures, and regulatory frameworks specifically designed to prevent all illegal financial trading and manipulation. The practical implications of this reset for the everyday Iraqi citizen are substantial and wide-ranging. They stand to gain from enhanced transparency in all financial dealings, significantly faster and more reliable banking services, and the security of knowing that their personal funds are managed within a robust, internationally compliant system. For the global investing community, this shift signals the creation of a safer, more predictable, and substantially more reliable financial environment, one that is poised to unlock massive opportunities in various sectors, including trade, essential infrastructure development, and sophisticated financial services. The moment chosen for this dramatic transformation is equally critical and strategic. Iraq is currently benefiting from exceptionally strong oil reserves, a sustained rise in global interest for investments within the region, and a determined effort by the Central Bank of Iraq to maintain a firm control over inflation. These converging factors create a unique optimal window for implementing such deep and meaningful reforms. Delaying action would only invite further instability and squander immense economic potential. By moving decisively now, Iraq is strategically positioning its economy to be more independent, resilient, and appealing to discerning global financial experts and investors who prioritize long-term stability. A deeper look at the Central Bank of Iraq's CBI role reveals that it is the bedrock of this entire national reset. The CBI is the central coordinating authority, working directly with J.P. Morgan to fully integrate state-of-the-art digital payment systems that can handle instant transfers, secure international settlements, and entirely traceable transactions. Simultaneously, the CBI maintains a close working partnership with the US Treasury to guarantee that all compliance and regulatory standards are met without exception. This partnership results in a strong, credible financial structure, allowing Iraq to operate with increasing independence while remaining fully trustworthy on a global scale. Consequently, the CBI is evolving its function far beyond that of a mere domestic monetary regulator. It is now actively engaged as a key strategic player in the global financial arena, systematically shaping the dinar into a currency capable of earning broad international trust and recognition. This shift in operational scope and ambition demonstrates the country's commitment to building a financial institution that is truly prepared for the demands of the 21st century global economy. The reasoning behind the U.S. government's extensive involvement in Iraq's internal financial system is based on the universally accepted principle that stability is mutually beneficial. A financially strong and transparent Iraq fundamentally reduces regional risk, contributes to the stabilization of global oil markets, and generates reliable, secure avenues for U.S. companies to invest. The Treasury's ongoing engagement is a calculated, long-term strategic move to ensure that Iraq develops into a dependable and constructive economic partner, guiding its financial transformation to be conducted safely, efficiently, and in strict adherence to all international governance standards. Returning to J.P. Morgan, their deep engagement is a potent signal of market expectation. Major financial institutions only commit resources of this financial reset is currently manifesting not as a theoretical plan, but as a series of concrete, verifiable infrastructure changes that are already well underway across the country. Core banking systems are being upgraded internally. New, digital wallet technologies are being rigorously tested to enable citizens to participate in a fully digital economy, and sophisticated Know Your Customer (KYC) systems are being implemented to ensure the legitimacy of every financial transaction. These steps are universally recognized as non-negotiable prerequisites for any currency aiming to operate freely and respectably in global financial markets. A key element of this transformation is Iraq's calculated and decisive move away from its decades-long dependence on the US dollar. For years, the economy was tethered to the dollar via currency auctions, meaning almost every aspect of the economy was exposed to the dollar's fluctuations. Now, Iraq is progressively shifting to pay for essential imports directly in dinars when dealing with key trading partners such as China, India, and Turkey. This represents a historic step toward financial autonomy, signaling to the world that the dinar is on a path to achieving true, independent standing in international trade. The inevitable question about the dinar's eventual valuation arises frequently. While no responsible analysis can offer precise figures or predictions, the substantial institutional effort, involving the US Treasury and JP Morgan, is not deployed for inconsequential, minor adjustments. These are the explicit, technical steps required to align a national currency with international standards and structures. The combined factors of digitization, regulatory compliance, and enhanced global connectivity strongly suggest that Iraq is gearing up for a new era where the dinar will be equipped to gain true global credibility and strength. The direction of travel is unmistakably clear. This entire reset operation is meticulously designed to profoundly strengthen the national currency, rather than merely achieve temporary stabilization. This path is being officially confirmed through public messaging from Iraq's foremost financial institutions. The Central Bank of Iraq has formally stated its unwavering commitment to collaborating with international partners to modernize its financial infrastructure, implement global standards, integrate local banks into international payment networks, and drastically enhance transparency. This level of public official communication lends substantial credibility to the ongoing efforts and confirms that a real, measurable transition is actively unfolding. Looking ahead, the successful launch and widespread adoption of a digital dinar represents the next major milestone. This will enable citizens to effortlessly open and operate digital wallets that are seamlessly connected to banks, essential government services, and major international payment systems. This capability promises instant, secure transactions, effectively eliminating the cumbersome need for intermediaries. This structural change is a true game-changer for the Iraqi economy, fostering not only transparency, but also unprecedented financial accessibility for all citizens, which in turn stimulates broader economic activity and rebuilds essential trust in the nation's financial system. A frequently underappreciated but vital component of this reset is the dramatic impact on investor confidence. When a nation successfully implements transparent, robust oversight mechanisms and modern, efficient payment infrastructure, it immediately communicates a lower-risk environment for capital deployment. Iraq's financial reset is sending this exact, powerful message. By meticulously building a clean, fully traceable, and highly efficient financial ecosystem, Iraq is signaling to the global marketplace that it is genuinely open, ready, and safe for substantial international investment and trade. The expanded strategic involvement of JP Morgan, a bank that has long handled key aspects of Iraq's oil revenues and international transactions, suggests a clear expectation of massive emerging opportunities. They are actively positioning themselves to manage the financial flows that are anticipated, to follow the currency's stabilization and strengthening. This is not mere speculation. It is preparation based on sound analysis of the country's strong economic potential and the verifiable execution of a comprehensive, multi-year plan. The benefits flowing to ordinary. In conclusion, Iraq's financial reset transcends the mere issue of currency value. It is about establishing a financial system that functions effectively, engenders deep trust, and can support decades of sustainable economic expansion. The joint involvement of JP Morgan and the continuous high-level oversight of the US Treasury represent a historic development that confirms decisive, serious action is now in full swing. Citizens can realistically expect more efficient banking, faster transactions, and a transparent, accountable financial system. The world is watching as Iraq confidently enters a new phase of economic modernization and independence. Is this the long-awaited reset? Everything observed, The infrastructure construction, the implementation of global oversight, and the high-level coordination with global leaders points directly to the affirmative. For the dinar, this means a systematic path toward credibility, transparency, and potential strength growth. For the nation of Iraq, it means stability, sovereignty, and the foundation for a modern economy. This transformation, unfolding rapidly in 2025, is one of the most compelling economic stories of the decade, and its implications will resonate globally.